that for the cash for the down payment. All my money I dump right back in there. I've also done the velocity banking route where I've got a home equity line of credit against my house. If I need some extra money there, I can take that and I can make a down payment on something or some kind of an investment. My rate on my home equity line of credit right now is 8%, where my IBC policy is 5.6. So I'm utilizing 5.6, the lower rate on that. And so that's where I'm at. I'm not utilizing my HELOC right now at all. I've got a zero balance on it. So just because that interest rate's up a little bit, but if that dips down again, I've got options. I don't have a bunch of money sitting in a savings account for an emergency fund. I've got access to money, right? So I can either borrow against my HELOC or I can borrow against my infinite banking policy if I ever come into a jam. You know, if we were just coming home from a long road trip wrestling tournament for one of the kids yesterday and the battery light came on. I was like, oh crap, I'm out in the middle of nowhere. If my alternator goes out, I'll be stranded on the side of the road with the family full of all of our crap. But look, knock on wood, luckily we made it home and all in one piece. The battery never did die. But I've got access to this other money in other places instead of just sitting in the bank making 0.0 nothing percent. Some other ways, some little key tricks they don't teach us in high school that you can make a little bit, an extra buck, and have your money growing and working for you rather than have it sit in the banks and work for the bankers. All right. Why buy the bank another house when you can buy one for yourself? Is kind of the way I think so.